Okay, it is my pleasure to welcome our keynote speaker for today, Zachariah George, General Partner at Launch Africa. In addition to the short bio that I'm just going to read to you now, I'd just like to say that me and Zach really have become friends and really is an exceptional individual. I urge you to pay attention to this presentation because every word that he says is straight to the point and backed by a lot of data and research and hard work. So Zach is the co-founder, Chief Investment Officer of StartUpBootCamp Africa, the leading multi-corporate backed venture accelerator program in Africa. He has a master's degree in finance and management from Stanford University and a bachelor's degree in mechanical engineering from the Indian Institute of Technology. Zach was formerly the head of Africa investments for UStart, the largest network of private multifamily offices in Europe. Prior to moving to South Africa, he was an investment banker at Wall Street, covering M&A, corporate finance strategy, and risk management at Lehman Brothers and Barclays Capital. In December 2019, he was recognized as one of the top most influential people in technology in Africa. And just recently, Launch Africa, his fund, was named the most active VC in Africa for 2021. Without further ado, Zach, please come join me.
Thank you. Thank you, Shai. Thank you, Empower Africa, and thank you to all the folks that have helped organize this. It's great to be meeting close to 100 people, if not more, on this virtual stage. So I'm gonna share a brief presentation here. But I'll try and make sure that most of these sort of in the Q&A later. So first of all, I'm here to talk about the exponential impact and growth of the VC industry in Africa and how important it is for corporates and startup collaboration in helping fuel this growth of the VC industry, and some of the lessons that we've learned from building one of the largest portfolios of early stage tech-driven startups in Africa. Okay, so the high-level perspective, I've been living on the African continent for the last 11 years. And one of the reasons why I decided to make Africa home after having spent almost a decade working on Wall Street was the fact that the global population growth is increasingly driven by consumer growth on the African continent. Over the next 75 years, more than 85% of the net population growth on the planet will come from Africa. So what that means from a math perspective is 1 in 3 people in the world will be of Africa. And if the amount of innovation we see in everything we touch, breathe, and feel, so from telecoms to infrastructure, to healthcare, to education, to food and water security, to mobility and logistics, if you don't have an element of serving the African population from a consumer purchasing power standpoint, you're missing out on a massive opportunity. And that's one of the reasons why I came here about 11 years ago. I'm physically based in South Africa, but our work stretches from Egypt all the way down to the south. So Africa is a huge opportunity where technology can be used to leapfrog growth. So about 1/3 of the world's population will be on the African continent. We've seen a stark rise in tech hubs and accelerators and incubators and corporate startup collaboration. And the bulk of activity on the continent has been in the financing sector has tended to be spread across private equity, corporate finance, manufacturing, and hard assets. The VC industry has only recently in the last 5 to 6 years really taken off. So just to give you a sense of some numbers, when I first came here in 2010, 2011, the total amount of venture on the African continent was at best estimates around $20 million. That number in the last 9 years has ballooned to more than $2.5 billion as of last year in the midst of a pandemic. So that's 120-fold increase in less than 9 years, which is the fastest growth of venture capital anywhere in the world. So just some interesting stats to know, not just has the amount of venture funding increased, but it's also the size of venture rounds, the average number of investments happening per round from seed to post-seed to Series A to Series B and beyond. And we've also seen several exits in the African tech ecosystem that have further fueled the interest from the capital side. We see more than 250 VC funds globally playing an active role in venture in Africa. I'm very happy to make these slides available afterwards. So in 2020, we saw, like I mentioned, almost $500 billion in funding in the continent. From a VC perspective, no prizes for guessing what sector attracts the bulk of that funding. It's predominantly financial services, so almost a third of all funding went into fintech and insurtech companies. And the reason for that is because Africa has 54 countries, each one of these countries has a different way in which people pay and get paid across businesses, across SMEs. And because the sort of 5 pillars of the payments or the financial services ecosystem, insurance companies, banks, retailers, and telcos, control distribution and customer data, it's very important to have a unified financial inclusion mechanism, and payments being a critical part of that. So a lot of the unicorns that you've seen in Africa, and we had 2 major ones just this past quarter, have come about because investments were made into this sector in 2013, 2014, 2015, and you're seeing the fruits of that now. So I've been one of the most active angel investors in African early stage tech ventures, the early days of Flutterwave, Kudabank, Paystack, Baga, etc. So these are the Nigerian, Kenyan, and South African fintech ecosystem 6 to 7 years ago paved the way for improvements in industries like mobility, logistics, health tech, agri-tech, and ed tech that you're seeing today. So the top 10 deals in the last 3 years tend to have come from fintech, clean tech, health tech, and big data. Launch Africa, I'll get to that in a second, is one of the top seed stage funds on the continent. We are, as of the first half of this year, the leading African seed VC fund from both a deals activity standpoint and the ability to work across multiple regions, multiple products, and multiple sectors. I'm really proud to see a much bigger interest globally into innovation on the continent. One of the reasons why we work with Empower Africa is we have a common belief that to create impact from job creation, improvement in healthcare, education, living conditions, access to transport, technology is a common unifying theme that makes innovation a lot more accessible to people that previously couldn't access it. And a key part of that is how can startup founders work with large corporates? So like I said, we've got more than 250 identified funds all across the world that invest actively in Africa. Of the $2.5 billion in VC funding on the continent, almost 85% of that goes into Series A, Series B, and later stage rounds of funding. And that's when predominantly international funds and institutional capital takes a big part of the funding ecosystem. The unfortunate reality is pre-Series A, most funding is limited to friends and family and local angel groups. That's why it's very important to have a mechanism or a structure where accelerators and incubators can demystify and de-risk investments before startups are ready for a later round of funding. So the whole reason why venture capital has taken a while to really solidify the content is VCs don't want to be investing money into companies and then spending a lot of that money into sorting out HR systems, legal structures, accounting issues, marketing issues. That's where accelerators like StartUpBootCamp, which is the one that I co-ran for 5 years, Y Combinator, Techstars, 500 Startups, the Founders Institute, Founders Factory, help create ventures that are investment ready and investment and ready for serious VCs to take a look at. So we've positioned ourselves as one of the most prominent seed funds that gets companies ready for investment at later stages. Just a key thing for aspiring angels in this group and people that want to know more about how to pick companies, you have to look at key components of what makes up a thriving startup ecosystem. So it's very important if you're looking at Nairobi, at Lagos, at Accra, at Cape Town, irrespective of where you're looking at, you got to find ecosystems where you have strong, talented, tech-savvy entrepreneurs. And that's not just developers. It's designers, it's digital marketers, and people that come from top-tier technical and business schools that choose to work at innovative startups and not just work in academia or consulting. And Cape Town, Nairobi, and Lagos tend to be the three epicenters of innovation. So it's important to find startups that have those ecosystems as great launching pads. You've also got to look as an investor or a partner at the availability of risk capital. So notice that I use the word risk capital and not just capital. So you have to understand the attitude towards risk. There's a reason why Silicon Valley, and to a certain extent London and New York, and now most recently Bangalore and Beijing, are epicenters of risk-based investing, is because the attitude towards risk is more driven by long-term returns than short-term benefits. So a lot of traditional investors in Africa and Latin America have focused on making returns in a year or 2 years, which is why they tend to move towards things like real estate or listed securities or capital preservation versus capital creation. And in more mature ecosystems like Silicon Valley and Western Europe, people understand the risk-return trade-off that venture capital provides, right? It's also important to look at what ecosystems facilitate corporate. So it's very important to understand as a startup, how do I minimize the cost of acquiring customers and how do I maximize the lifetime value of a customer? So the reality is in Africa, unless you partner with large insurance companies, banks, retailers, it's very hard for you to acquire customers on your own unless you have a ton of money, usually the tens of millions of dollars to spend in marketing, which is hard to get if you're an early stage startup. So something that we've noticed works really well is B2B and B2B2C business models, where startups work directly with large businesses to help them with distribution. And they effectively lower their marketing and customer acquisition costs down to as close to zero as possible. And the trade-off is you get scale, so you sacrifice a bit of margin in exchange for, and the smartest African tech startups do that exceptionally well. They lower their customer acquisition costs and they maximize their customer lifetime value. And we've seen that in more than 5,000 startups that we've looked at over the last 6 years. And that ties into the point around accelerators and incubators. All else being equal, startups that have gone through world-class accelerators have an exponentially higher chance of succeeding and not failing, and Africa is no exception. And the last one I want to make here is it's very important for governments, be they regional, national, municipal, or even local, to be enablers of innovation and not come in the way. So governments like California, the Western Cape in Cape Town, the government of Tunisia, the government of Senegal provide enough incentives, be they grants, through tax subsidies, etc., to make it more lucrative for founders to start technology ventures. So we can see more African versions of Lyft, Dropbox, Spotify, Airbnb, etc. And we have plenty of those, but it's because government plays an enabling role. So these are some important components that you should keep in mind before you start investing in ecosystems. I mentioned this earlier. These are some of the characteristics of the most successful African tech startups. So you want to look for startups that have a strong B2B or a B2B2C business model. You want to look at startups that have a low cost of acquiring customers, and one way of doing that is partnership with large corporates, something that StartUpBootCamp, the accelerator that I co-founded in Africa, does exceptionally well. And you want to look at how you can work with large insurers, banks, retailers, telcos, and media companies early on. A big thing to focus on when you're looking at VC in Africa is what is your acquisition strategy for customers? How do you activate them? How do you retain them, refer them, and create revenue out of them? So it's important as an investor or a potential investor to understand that venture capital is so different from private equity. It's almost like oil and water. So if you're looking at things like break-even analyses or profitability or EBITDA margins, you're literally fishing in the wrong pond, right? So just by looking at what metrics make sense, things like balancing your growth versus your churn or reducing your dependence on external forces in marketing are very important things in the VC industry. And not everyone is aware of these trends, but if you look at the most successful VC funds in the US, they use different metrics in assessing companies versus what traditional private equity firms work on. So I'm a big believer that venture capital, the model needs to be disrupted and not just based on traditional private equity models in Africa with smaller checkbooks. And the last thing I'd say here is when you look at investing in innovation, especially on solving real world problems, it's important to understand that when you can save people time and create more convenience in their lives, you create a lot more value than just focusing on price and quality, which are traditional metrics of valuing businesses. Some of the things that the top VC funds in Africa look when they invest in companies is the strength of teams. Because Africa has a limited history of VC, find repeat founders in the industry. So we look at founders that have a lot of experience in a particular sector. We look at very big total addressable market. So a good benchmark for you as potential investors is never invest in a business as a VC or an angel investor unless a total addressable market is at least $100 million with startup launching. It's a good barometer to have. From a traction perspective, keep in mind that revenue is not the only barometer of success in certain industries, like for example, digital banking. A key metric to look at is what your monthly active customers are, even if your revenue hasn't been monetized. If you're looking at a payments company, you typically look at your transaction volume versus your revenue. And these are things that investors will understand with time. So you cannot use the same yardstick and metric for valuing companies as you could valuing non-VC assets. And something that we talk about our fund a lot is we always look at companies where the IP sits in investor-friendly jurisdictions. So typically Singapore, the US, the UK, the Netherlands, where the holding company structures are always overseas from a tax perspective, from an IP perspective, and from an investor repatriation of funds perspective. So most of the prominent stocks are actually US, European holding companies, but all the operations happen on the continent. That's a key factor to be aware of as an investor. And we look for businesses that are transforming business as usual. A really quick thing before I talk about the fund is when you look at evaluating technology startups, not just in Africa, but across the world, it's very important to understand what the lifetime value of an investment is versus the cost of acquiring that customer, right? So you want to invest in businesses where you spend the least amount of money acquiring customers, but you get the highest amount of lifetime value. So your LTV to CAC ratio, unless it's at least 3, it's a good barometer of what you should not be doing. It's a similar thing with your margins. You want to be investing in companies. It is perfectly normal as a technology VC that targets anywhere from 25 up to 200% returns, and these are real numbers based on track records historically, to invest in companies that have negative EBITDA and negative operating margins. Most of you may be aware that for many years, for 22 years, in fact, Amazon was a loss-making company and was at its height of its losses valued at $2 trillion, right? So it's about understanding what metrics make sense, horses for courses, right? So EBITDA margins in isolation mean nothing in this industry. What really is important to evaluate is how do margins compare with the growth in margins? So a good barometer to look at for the folks that aren't in this industry is my EBITDA margin together with my growth in margins needs to be at least 40 or more. And the last thing I'd say here is understanding what a good growth to churn ratio is Churn is basically the percentage of customers that you lose over a period of time. So you want to always balance aggressive marketing from a customer acquisition standpoint versus customers due to a poor operational and maintenance and operation. So these are important metrics to look at that credible VCs focus on. And the important thing here is, we've all seen stories of valuations going out of the roof in Africa. The real sort of barometer that measures how valuable a startup is always validation. Have you found product market fit? Have you found a problem solution fit? It doesn't matter how long you've been in existence for or how much funding you've received. It's about how you validate a product market fit. So just very briefly, and I'm happy to share these slides with you. Launch Africa Ventures is one of the top VC funds in Africa. It's built on almost 10 years of work we've done as an accelerator. So we are at our core and heart, we are venture builders. We build the most incredible, innovative technology ventures in Africa with founders. We are a founder-first and founder-friendly VC fund, and we provide capital at the stage where typically only angels and friends and family and small regional VCs invest in. So as Shai mentioned earlier, we are the most active VC fund in Africa. We are a $25 million fund. We've raised $1 million in capital. We have over 100 investors in our fund from all over the world. And we make investments of up to $300,000 in the most innovative tech companies in Africa. This is our second fund. Our first fund, StartUpBootCamp, has a current IRR of more than 50%. And one of the top digital banks in Africa has returned more than 2,000 times our capital. So just a high-level sort of numbers. We are a $25 million fund. We have been active since September last year. We've made 47 investments into 11 countries in Africa. The common theme being, how does technology aid in disrupting industries? So some of the investments that we've done include health tech companies, insure tech companies. We have several of our portfolio companies on this call in the audience. We were one of the first investors in some of the top fintechs on the continent, and we are positioning ourselves to be early investors in fintech, health tech, education tech, agri-tech, and mobility and logistics companies. Our target returns are at least 3 times our money in 5 years based on our track record over the last 10 years. I'm happy to sort of discuss this in detail with people that are interested, but these are some of our current portfolio investments. Just a couple of highlights. One of our companies is called Orexol, which is a company that is tackling the counterfeit drug industry in Africa that's valued at more than $30 billion. It's also the fastest and easiest delivery platform for pharmacies and drugs. We have a company called Alpha Direct in Botswana that is a direct-to-consumer insurtech in the non-life sector that is disrupting the way people look at insurance and is insuring the typically uninsured. We got an incredible number of education tech companies that are changing the way people see education from an online course content perspective. We've invested in a super app in Togo and Benin that's modeled on Grab and Gojek in Southeast Asia. We're investors in the leading digital bank in Africa, Kuda Bank, that is modeled on Monzo and N26 in Germany, currently valued at close to $500 million. So we've got a good mix of investments on the continent, and it's probably for investors that want to get a sense of what is happening and get a line of sight into innovation on the continent. This is one of the most broad spectrums of innovation across regions, across products, and across technologies. So almost all our investments include some element of either artificial intelligence, Internet of Things, drone technology, sensors, marketplaces, and basically innovation that reduces the route to market. Again, I just want to give a couple of examples. We were Kuda Bank and Flutterwave, 2 of the most valued fintechs in Africa, are companies that we've helped growth and scale from when they were tiny companies. going to stop there with one of my favorite quotes from South Africa's first President Nelson Mandela, who said, it always seems impossible until it's done. And it's something that I strongly believe, and I strongly believe that if you invest time, energy, money, resources, and networks into supporting the true heroes here, which are the entrepreneurs that are using innovation to do good, there's a lot of significance and impact that can be to making people wealthier from an economic perspective. So I'm happy to stop and take some questions, but thank you all for listening to us.
Great. Zach, thank you so much. We're going to have a quick Q&A now before we move on to the rest of the program. So I'll read here one of the questions from Mike. Zach, given the explosion of fintech and insurance globally, are local startups in the space starting at a disadvantage as they try to scale locally before the global heavy enters the market?
So I just missed the last part of that, Sean. Would you mind just repeating?
So yeah, so it's actually, I think what he means is, are the companies in Africa, the local companies, starting at a disadvantage as they try to scale locally before some of these global large companies enter the market?
Yeah, I mean, I'll give you anecdotal evidence of that. Like, there is a reason why Amazon has struggled in Africa. There's a reason why PayPal has struggled in Africa. It's because African consumers have different challenges and needs to what consumers in more developed markets have. Unfortunately, most of the innovation happening in, I'm going to call it the Western world, but the first world, I'm just going to say that for now, tends to be solving nice to have problems, right? No one really needs to have 10,000 songs on their iPhone to create value, or needs to have a drone that delivers organic smoothies to a high-rise building, right? So because there's an oversupply of capital, a lot of problems are not really tackled in an efficient manner. So that's why you see the startups in Africa that tend to create value are solving real problems in healthcare, in food, in water security, in education, in logistics and transportation. And you're seeing, because of a higher purchasing power of consumers, the unit economics, and this is the one thing I keep saying, is if your unit economics are good, there's scale. Right? So a lot of African solutions always start with a local market, like in Nigeria or in South Africa or in Kenya. And part of the benefit of having a Pan-African global VC, such as ourselves, but there are plenty others, is that we only invest in companies if we add value to help you scale beyond your home markets within 12 to 18 months of us investing in you. So the only way you can really grow is if you have layers of revenue models to help you scale. You're never going to become a $100 million company if you're only working in Namibia or in Ghana, right? That's very important. You have to start local, but early on. Right.
Yeah, that's a very good point. And segueing on what you mentioned, you actually mentioned healthcare. So somebody asked here, Zach, thank you for the nice presentation. While the potential for investment is huge in healthcare, why is it really so low compared to other industries?
Yeah, it's because healthcare tends to take much longer. Healthcare tends to have a much higher upfront cost, which tends to be CapEx driven, which essentially, horses for courses, needs low cost asset financing. So if you want to, let's say, fund a healthcare startup in the medical devices space, you need to have low-cost debt funding or grant funding for medical devices and medical equipment, and infrastructure costs to see long-term returns. So unfortunately, and it's changing every day, smart, savvy VC investors have 5 to 7 to 10-year horizons. If investors are used to seeing 2 to 3 times their money flipping properties, and now saying, I want to put some money into venture, that's a fundamental asset liability mismatch. So what the visions of the VC industry in Africa that have gotten the most amount of money tend to be asset-light industries like payment, like insurtech, like logistics and mobility, and healthcare seems to have taken a back step because of the high upfront capex. But for example, doctor-patient booking platforms or telemedicine or drug delivery platforms, for example, M-Pharma in Ghana, have gotten a lot more funding than, for example, medical devices or things like electronic health, document management systems that typically needs a lot of asset financing. And that's you can't view all health tech startups as equal, for lack of a better word.
Right.
But it is quite a bit.
Yeah, and actually, coming to think about it, it's also just another, thing that I hope we all improve as a human society, right? Of not just looking at the CapEx, because like you said, it really does take a lot more for these industries, but it's human life we're talking about, right? So of course, so much other importance there, but thank you, that's great. One last question: what are the governments and countries that truly get it? And this is an excellent question, by the way, because Zach really knows across the continent all different ecosystems. So what are the governments and countries that really get it and that have implemented the process for the right incentives to support the growth and maturation of the startup ecosystem? Who would you say the top 5 countries, so that we don't in other countries?
The top 5 regions in terms of governments being inclusive of innovation on the continent are, I would start off saying, with an unlikely country, Rwanda. Rwanda is exceptionally pro-innovation. There's been a ton of interest. The government is extremely supportive of innovation, be it through tax subsidies, through R&D grants, through entrepreneurial schools. I mean, Rwanda is right up there, even though the country has 8 million people. Right. Number 2, I'd say, is Nigeria. Nigeria, although the government hasn't done much, it provides, Nigerian entrepreneurs have had the most amount of, to use a colloquial word, hustle in getting stuff done. And it helps with the million people unofficially. So from a market sizing perspective, there's a lot more opportunity. Nigeria's population is expected to surpass the US of A in the next 15 years, right? Wow. And as long as the purchasing power of Nigerian consumers is high, and it's getting higher and higher and higher, it would be a big folly to not look at Nigeria as a market, right? It's sort of growing at the same trajectory as where India was growing as little as 7 to 8 years ago. So that's from a market size perspective. Egypt, huge market. Consumer purchasing power, the level of technical innovation in that country, 120 million people that all speak the same language, a lot more homogenous. It's a lot easier to scale within Egypt than it is to scale, let's say, in other countries. Right. Egypt is number 3. And number 4, number 5, which are pretty obvious, are Kenya and South Africa. Kenya, because of the very close relationship with telcos. Remember the thing I mentioned about distribution. If you can partner with telcos, you get access to data. And whoever wins data controls the ecosystem. So Kenya, very high on that point. And South Africa, because of its very close relationships with banks, insurance companies. That's why you see a lot of big data commerce companies that are very successful, retail tech companies. South Africa, you'll see a lot of insurtech, Southern Africa, a lot of fintechs and insurtechs. So I'd say South Africa, Kenya, Nigeria, Egypt, and the outlier being Rwanda because of the amount of innovation the government helps, But again, our fund invests all over the continent, and the majority of companies we invest in have their IP offshore, so it's very, very investor friendly. Like I said, we've got 100 plus LPs in our fund, and we've got room for a few more LPs with people that are interested here. Yes,
100%. So on that note, people are asking, and so I urge everyone, if anybody who's interested, please either go to the Launch Africa booth or to the Empower Africa booth. You could also find me. You could also find me on LinkedIn, or just my email is shy@empowerafrica.com, and happy to connect you to Zach and see how you can invest in his fund. Zach, thank you so much. As always, wonderful to see you, wonderful to hear your insights. And I hope that as we spoke, we'll meet together in Cape Town soon in person. And before we move on, so first again, Zach, thank you very much for joining us.